The legal battle between SEC and Ripple is yet to get the most awaited summary judgment, and both parties requested the court to set a deadline for sealing the summary judgment. And Ripple has already filed their final redacted reply to the SEC's opposition to Ripple's motion for the summary judgment. And looking at that filing, this is massively strong defense that Ripple has placed. And if we have not met before, I am Rohan Paul and here to help you in your journey into the world of crypto and investment. So do hit the subscribe button so that I can keep you updated with all the latest news and analysis of events. Alright, thanks to Attorney Phylan, we have the document and I will put a link of this in the description of this video. Okay, here is the document I downloaded, and here the plaintiff is SEC and the defendants is Ripple. So the background of the case is that the SEC first sued Ripple in late 2020, arguing that the payments firm sold the crypto assets XRP as an unregistered security. SEC's allegation is that the XRP token is a security and has done severe damage to investor confidence in the project, as it also means all sales of the token, including secondary sales on exchanges, have amounted to unregistered security offerings. And to its defense, the defendant, that is Ripple, what they are saying, and which is very much the key point of this entire 65 pages document, is that the SEC has failed to prove the XRP sale between 2013 and 2020 was an offer of an investment contract and therefore a security under the federal securities laws. Therefore, Ripple stated that the court should grant defendants' motion and should deny SEC's motion. All right, now I will go through some of the beautifully explained points in this document. Here under the preliminary statement, they are saying the SEC cannot show that any offer or sale of XRP, much less everyone from 2013 to 2020, as it alleges and bears a burden to demonstrate, was an offer or sale of an investment contract and therefore a security under the federal securities laws. This case turns on statutory interpretation, specifically whether the SEC can misapply the statutory phrase investment contracts to cover transactions that have none of the essential ingredients, in particular, the bundle of ongoing rights and obligations that define an investment contract. Even for transactions that involved an exchange of money, the SEC has failed to show that purchasers invested that money in a common enterprise, as Howey requires, rather than simply buying an asset. Further, here the SEC has now conceded that the digital asset exchanges on which the individual defendants conducted the vast majority of their transactions were foreign. That concession extinguishes its claims because federal securities laws do not reach foreign sales and offers. In short, the SEC is asking the court to rewrite the statutes that defines its authority. For the SEC to prevail in its opposition, the court would have to endorse the SEC's theory that there can be an investment contract without any contract, without any investor rights, and without any issuer obligations. Coming down further, I found a great explanation over here in the footnote. Let's go through it. So what Ripple is saying, it is also undisputed that at least in many cases, there were no contracts between defendants and purchasers of XRP. Contradicting its own rule, the SEC incorrectly claims every single sale here involved the presence of a written contract. That claim is a sophistry. The written contract that the SEC asserts was present in exchange-based sales was not between Ripple and the purchasers of XRP. It was between Ripple and Ripple's market makers. The SEC could as well say there is a written contract present when a McDonald's franchise sells hamburgers to customers because McDonald's stores are run under the written franchise agreements. The undisputed points remain. There were no contracts, much less written contracts, between the defendants and a single exchange-based purchasers of XRP, just as there is no contract with the McDonald's Corporation when people buy Big Macs. I found this explanation really powerful. Anyway, going down, The SEC retreats to arguing that the sale of any asset necessarily involves a contract as long as the requirements of offer, acceptance, and considerations are met, and that such contracts may be written or implied. But that argument fails for the same reason. Even if exchange-based purchasers can be said to have entered into contracts with market makers, they have never entered into any contracts with defendants. Here again, defendant means Ripple. It is worth stressing, moreover, that the SEC has not presented any of these supposed contracts to the court, and it has developed no evidence as to the existence or contents of any of the supposed implied contracts it belatedly invokes. So overall, the SEC cannot prove investment contracts without introducing a single contract at first. And across these arguments, these Howey test was mentioned so many times. So let's go through this kind of interesting point here. So the point of the Howey test is to determine whether the bundle of rights and obligations amounts to an investment contract. To do that, it is necessary to know what those rights and obligations are. Because no such rights and obligation exist here, the SEC lapses into incoherence in its attempt to apply Howey. Now, this is a very important point. Look at this. So what they're saying, Ripple is saying, but even if Ripple could somehow register XRP, no digital asset exchanges in the United States is registered to trade digital asset securities with the SEC. So XRP would be effectively illiquid in the United States, as it has been since the SEC chilled the market by filing the lawsuit. And here Ripple is giving arguments against considering Ripple as a profit-seeking business venture and all the purchasers of XRP as its investors. So Ripple is saying the SEC argument also runs afoul of Supreme Court precedent, as Howey explained in Common Enterprise must have all the elements of profit-seeking business venture in which the investors provide the capital and share in the earnings and profits. The promoters manage, control, and operate the enterprise. The SEC fails to identify any such profit-seeking business venture. A perfunctory argument that ongoing obligations between the promoter and investors are not required to prove a common enterprise, citing no authority, is wrong. As defendants demonstrated, a common enterprise requires an ongoing relationship between the promoter and the investor. Without that, there is nothing that can fairly be called an enterprise in which the investor holds a share. The SEC concedes that XRP holders had no rights to receive anything from Ripple and that Ripple had no obligation to do anything for them. And on that point further, the SEC's attempt to suggest that increase in the price of XRP can take the place of pro rata distribution is wrong, because the SEC does not and cannot specify any profit-seeking business venture whose profits are supposedly distributed through the vehicle of XRP price changes. And without such business enterprise, the SEC theory is no more viable than a theory that every gold bar, coin, or necklace represents an interest in a whole gold ecosystem. Anyway, the document goes on further explaining some beautiful points across all of its 65 pages. I highly recommend you definitely go through these, and especially some of the cases mentioned in the footnotes, and some of the explanation given in the footnotes are just beautiful. So if you got time, definitely go through these great explanations. And you can also follow Stuart Alderoty, the General Counsel of Ripple, in Twitter. He sometimes tweets on explanation of various positions that they have. Like he mentioned a few days back that Ripple is proud of the defense it has mounted on behalf of the entire crypto industry, noting that Ripple has always played it straight with the court, taking a subtle swing at the SEC, saying he cannot say the same for the adversary. Anyway, after submitting the replies, both SEC and Ripple are asking U.S. District Judge Annalisa Torres to set a deadline of January 4th, 2023 for non-parties to file sealing argument ahead of a summary judgment. That pretty much wraps up this video. If you liked it, do smash the like button, and also don't forget to subscribe. See you in the next one.